Hi everyone, welcome back to Xrax channel. Xrax School. Today we are talking about one of the biggest financial shift happening in the corporate world. Companies around the globe are now adding cryptocurrencies like Bitcoin and Ethereum directly into their treasury reserves. This strategy is known as crypto corporate treasury and it is reshaping how modern businesses think about cash inflation's liquidity and long-term financial security. Over the past few years, the traditional companies have relied on bank deposits, government bonds, and cash reserves to protect their balance sheet. But as this inflation rises, interest rates fluctuate, and global financial uncertainty increases, many corporations are exploring alternative assets. And crypto, especially Bitcoin, has become one of the most attractive options. So, what is exactly crypto corporate treasury? In simple words, it means that a business holds part of its financial reserves in digital assets instead of keeping everything in cash. Some companies are buying cryptos as a hedge against inflation. Others are buying it to diversify their treasury and reduce reliance on traditional banking system. And some are using crypto in position themselves as modern tech-forward organizations that believe in the future of decentralized finance. One of the biggest reasons behind this shift in the performance of Bitcoin over the last decade, despite high volatility, Bitcoin has consistently outperformed most traditional assets in the long term. Many corporate leaders believe that holding a small percentage of Bitcoin can significantly strengthen their balance sheet over time. This thinking becomes mainstream after high profile companies started adopting crypto. One of the earliest and most famous examples in the MicroStrategy, whose CEOs turned the company into the world's largest corporate holder of Bitcoin. This strategy influenced hundreds of other businesses to exploit crypto as a treasury assets. But it's not only tech companies doing this, even manufacturing businesses, retail, brand service companies, and some financial institutions are exploring crypto treasury strategies. The idea is simple. Instead of letting money lose value due to inflation, diversity into digital assets that have high growth potential. Some companies are even accepting payment in crypto and keeps those payments on their books as a part of their long-term reserves. Now let's talk about why corporations are attracted to crypto treasury models. First, crypto is global and operates 24/7 hours, meaning companies are not restricted by banking hours, international transfer delays. Second, cryptocurrencies provide transparency and portable ownership through blockchain technology. Third, the liquidity of top cryptocurrency mean companies can convert digital assets back into cash almost instantly if needed. Another major reason is inflation. Many CEO worries that keeping too much cash on their balance sheet produces purchasing power on time. So instead of relying on traditional saving instruments, companies are shifting a small percentage of their assets in cryptos to create a long-term store of value. This trend also grown to increase institutional adoption. Today, more hedge funds, asset managers, and even pensions funds are exploring digital assets, which gives companies more confidence to add crypto to their treasury strategy. However, crypto corporate treasury is not without risk. The biggest challenge is price volatility. This value of crypto can rise rapidly, but it can also sharply fall. That's why companies must follow strict risk management strategy and also allocate a portion of their treasury instead of going all in. Another challenge is regulatory uncertainty. Different countries have different tax rules and compliance requirements, meaning corporations must work closely with financial advisors before adding crypto to their balance sheet. Security is another major concern. Companies holding large amount of digital asset must use secure custody solution, multi-signatures, wallets, and institutional-grade protection to avoid hacking or theft. Many corporations now partner with professional crypto custodians which specialize in storing large-scale digital assets securely. Despite this challenges, the trend continues to grow. Every year, more corporations announce that they are adding Bitcoin and Ethereum to their treasury. The global financial landscape is changing, and companies want to stay ahead. Holding crypto is no longer seen as gamble. It's becoming a forward-thinking financial strategy designed for long-term growth, protections against inflation, and global liquidity. As the blockchain technology continues to evolve, corporations will likely integrate even more digital assets into their financial planning with our tokenized real-world assets, stablecoins, or cross-border payments, or decentralized finance tools for yield generation. The corporate treasury of the future is going to look very different from what we see today. This is beginning of a new era where companies don't just rely on traditional banks. They build hybrid models combining cash, bonds, and digital assets. Crypto corporate treasury shaping a financial world of tomorrow, and the business that adopt early will have massive advantage in this year ahead. Thanks for watching, and if you find this video helpful, make sure to like, share, and subscribe to Xrax Gold for more financial and crypto based research content. Thanks.